Okay, I think the numbers are slowing down now, so I'm going to jump in. Good morning, everyone, and thank you very much for joining us today. My name is Patrick Sullivan, and I'm the President and CEO of the Halifax Chamber of Commerce. It's my pleasure to welcome you all to today's Navigating COVID-19 webinar with our guests from TD, Ali Massoudi and Rob MacNally. They're joining us today to discuss tactics you can use to empower your business during these uncertain times. It has certainly been a tumultuous few months for business and businesses, so we wanted to present tangible information on how you can manage your business and provide the opportunity for you to ask questions on the subject. I'd like to welcome our guest speakers and thank them very much for joining us today. Ali works as VP of Commercial Banking for Atlantic, overseeing the Nova Scotia, Brunswick PEI, and Newfoundland markets. And he has over 21 years of banking experience. Ali is a strategic leader who is known for his ability to establish great business relationships, work collaboratively, inspire teams, and get results. Rob has been working to support small and medium-sized businesses at TD for over 20 years. Currently, he is Senior Manager of Small Business Banking for Atlantic Region and leads a team of dedicated bankers serving small businesses in the 4 Atlantic provinces. Rob is passionate about small businesses, that's good, and the significant impact that they may have on their local economies. If you have a question during the presentation, please type it in the Q&A box, which you'll see at the bottom of your screen. If you're commenting in the chat box, I would encourage you to address your message to panelists and all attendees so that everyone can see your post, because it may be of interest to all, and it would help everyone to see what your question is, and other folks may have the answers as well. So if you respond to all panelists, only I will be able to see. I think actually all the panelists will be able to see, but everyone won't be able to see it. So would encourage you to ask questions either through the chat box or the Q&A. The Q&A is probably the most efficient way, so would encourage you to take a look at that. And now, Ali and Rob, I'll pass it over to you.
Thank you, Patrick. It's a pleasure to be here, and we appreciate the opportunity to speak to our business community. I'd like to start by acknowledging what a strange and difficult time we're experiencing. What a long year the past 8 weeks have been. While I'm grateful to live in this beautiful city and thankful to many, many people, I'd like to take a minute to give special thanks to a few groups of people in particular. Firstly, to all the frontline workers that altruistically head to work each and every day, sometimes meaning that they have to separate themselves from their own families so that we can continue to function as a society. Secondly, to all the entrepreneurs that are the backbone of the Canadian economy. You continue to drive an engine of progress and innovation during an extremely difficult time, making increasingly hard decisions that ultimately keep our economic fabric together. And finally, to all our partners in the business community, the Chamber, the accountants, lawyers, insurance brokers, all of my team and colleagues, not only at TD, but at all the banks. You have all been working tirelessly to operationalize the many government programs that exist today, to disseminate all the information to the public, and provide advice and counsel in order to help business navigate these precarious times. So to all of you, thank you. We move to our next slide. We're gonna talk a little bit today about tips and tactics to empower your business. And as we all work through a situation that frankly not one of us has ever experienced before, I wanted to focus on certain things that either our clients are doing or other businesses are doing, and that they've embraced, whether it's a mind shift or actual tactics, in order to not only weather the storm, but to position themselves for a recovery. Hopefully, Rob and I can leave you with a couple of nuggets that will be helpful to you today. In essence, we're going to be covering what I like to call the 4-pillar approach, which in its essence focuses on financial health and planning, liquidity preservation. We're also going to talk a little bit about the 3 C's of credit, to help demystify the banks a little bit and the lenders in general. We're going to talk about a shape-up model that I've stolen from McKinsey, or I've cited from McKinsey, which I find is a great model that helps us reset and put our minds towards rapid revenue recovery, which is going to be critical as we come out the other end of this pandemic. And finally, focus a little bit on relationships and networks and how important those are, particularly today. Rob will also provide you with some quick tips, and hopefully overall we can, like I said, leave you with a couple of nuggets. If we just move to the next slide. This is the visual, I guess, that I'd like to leave you. The 4 areas of maybe my business that I would particularly want to keep top of mind and ensure that I over-communicate. Liquidity, as we all know, is of paramount importance to everyone. We've all heard the dated expression that cash is king, but never is that more true than during a trough or a down cycle. So we'll talk a little bit about how we can keep cash on hand. This quick framework helps us differentiate between relationships that can be leveraged in order to preserve liquidity or enhance it. Save cash, increase cash. This serves us to help. Serves to help us survive, I guess, the hardships and be prepared for the opportunities that will inevitably emerge on the other side. This will be the framework for our chat today. How do we preserve or enhance our working capital? Is there an opportunity to clean our balance sheets and divest of non-performing assets, reduce debt? Are there key relationships that I can leverage in so doing? Do I have the bench strength to succeed in tomorrow's new economy? So at this point, let me pass it over to Rob, who can talk to us about some of the topics that fall under the financial health, or really the top half of this paradigm.
Thanks, Ali. I want to start by emphasizing how important it is to know your numbers and to have a plan. As a business owner, it's always vital for you to understand your numbers, and that is more true now than ever. It starts with knowing your point-in-time situation, your balance sheet. What's your business net worth? Your assets less your liabilities. This is a starting point to understand what kind of flexibility you might have to weather the storm. What's your personal net worth? Do you know your credit score? Often business lending, especially at the smaller end, can be linked closely to your personal financial situation. Next, you need to understand your revenue. Where were you before the pandemic hit us? And where are you now? As a parent, I've been using the start of March break as a kind of benchmark for when things really took hold here in Nova Scotia. Based on that, it's been almost 8 weeks. So you should be able to have a fairly good idea of what's happened to your revenues at this point. One thing that gives lenders a great deal of comfort is when a business owner really knows where they stand. If you tell your banker that you think revenues are down at least 50% because of the pandemic, that's okay. But if you can tell us that you know your revenues are down by 59% from $10,000 a week this time last year to $4,100 a week, that's great. It'll really go a long way towards instilling confidence. The same holds true on the expense side. Know in real dollars what you're spending each week. Go through your credit card statements and bank accounts if you need to. And I would recommend looking at it on a weekly basis at this point versus monthly or quarterly, given how quickly things are changing. Now that you know where you stand, even if it's not a pretty picture, you might be surprised at how empowering it feels to move from a general sense of dread to an accurate picture of where you stand. And this is just the starting point. Next, it's time to make adjustments. So if you've identified that you are cash flow negative by, say, $1,000 a week, you can start taking concrete steps to work that number down. What can you do to increase revenues? Can you increase your online presence, move to deliveries, shift to a new product or service? What can you do to reduce expenses? I know many of you have already made the heart-wrenching decision to lay off employees or reduce their working hours. What other expenses can you go after? Think about your cash conversion cycle. If you buy goods from suppliers, give payment terms to customers, and/or hold inventory, there may be an opportunity to free up some cash flow. If you normally pay for goods within 30 days, is there an opportunity to stretch this to 60 days? In good times, collecting accounts receivable can fall down the priority list. Can you make sure that customers pay their bills on time or even early? Can anyone pay COD? Do you normally hold 60 days worth of inventory? Can you reduce this to 30? Taking any of these steps can help reduce the amount of cash that is tied up in your cash conversion cycle. The last thing to think about is what payments can you delay? Rent and principal payments are the big examples here. But keep in mind that when you defer payments, they aren't going away. So it's important to understand how you will make up the gap in future payments and what the costs of deferring are. Don't forget deferral of payments on the personal side as well. Once you've gathered up all of this information, it can help you build one of the most important tools a business owner can bring with them when meeting with their banker, a forecast. If you show up with a weekly cash flow projection, your banker's confidence in you will increase dramatically. Now, I've worked with many business owners over the years who were reluctant to provide projections because they're afraid things would change. We expect projections to change. That's okay. The value of a projection is not that it will be exactly accurate. If you understand the underlying assumptions and use them to create a benchmark, now you have the ability to quickly make adjustments. So for example, let's say your plan assumes $2,000 a week in sales. If it turns out you only bring in $1,800, you can quickly make adjustments, staffing, purchases, investments. If you don't have a plan, then you may not realize until it's too late that changes are needed. The last thing to consider here is to understand what funding options are there to get you through any shortfalls in your cash flow forecast. Do you have personal resources that can be invested, and will that work for your family? Have you exhausted all of the government funding options available? Can you use all of this great information that you've gathered up to access more credit from your bank? And can you hold something in reserve in case you need to make those adjustments we talked about? Whether or not you need more credit from your bank, these exercises can be incredibly empowering. Know where you stand, know your current cash flow, take steps to improve your cash flow, know the resources available to you to fund your shortfalls, have a plan, and be ready to make adjustments when things inevitably change. Now I'll turn it over to Ali to talk a bit more about what your banker is thinking about when she renews a loan request.
Thanks very much, Rob. If we could move to the next slide. Thank you. I guess my starting comment here would be that your lender's interests are aligned with yours. They can't succeed if you don't. Now, fair enough, we don't always get the answers that we want to hear, but keep in mind that generally your interests, again, are very well aligned with ours. I wanted to go over the 3 C's of credit, which is the fundamental 101 of lending, I guess you will, that a lot of lenders will first learn about when they embark in the industry. And I want to do so in order to demystify the process a little bit so that you understand what lenders, whether they're banks or others, are looking for when they make decisions when looking at a credit application. Furthermore, I think that this will help focus on which sections of a business plan have a heavier weighting in the adjudication process. I've seen many business plans over the years that focus on telling a great story, that focus on the size of the market, for example, the opportunity, but really don't put a heavy weighting on the critical components that ultimately will be evaluated when making a credit decision. So think about this model as the 3 legs of a stool. The first C in the model is character. And character talks to several things. Probably the more obvious ones would be reputation. So that could be your personal reputation, the owner's reputation. It could be the reputation of the business, or potentially there's an ongoing issue within the industry that may have a reputation risk associated with it. So that falls certainly into character, or maybe an obvious one. The next one is around experience. What is the experience level? Who are the subject matter experts that you have on your team? Have you worked in this type of industry before? Have you ran a business before? If not, do you have an advisory board? Do you have a board of directors? What's their experience level like? What have they done in the past that will help guide your future? Management Information Systems, MIS, is probably one that people don't necessarily associate with character, but it really is. It's a part of a character as it talks to management acumen and leadership strength. Knowing exactly what the score is at all times is critical when you're running a business. And that will certainly talk to your character in an assessment of a credit application. Understanding your inventory processes and systems, understanding whether or not you're able to produce timely financial information, as an example, how well integrated are all your programs, etc. Credit history is another one that we'll touch on a little bit later in the presentation. But credit history is critical, obviously, not only your personal credit history, but also your business's history. Equifax not only provides personal credit experiences, but they also provide business experience, which tells individuals, or rather shows individuals, what their repayment terms have looked like. Are you slow to pay? Do you often miss payments? Obviously, this will be a critical factor in determining character when looking at any kind of credit request. The final one that I wanted to touch on when I talk about character is enterprise net worth, tangible net worth, retained earnings. Really, how much profit are you keeping in the business at the end of the day? Now, obviously, there are some implications with respect to liabilities and moving certain assets outside of the company, which your accountants and lawyers will give you plenty of advice on. But as a lender, lenders want to understand, is all the profit being stripped out of the company? Is there adequate money being kept in the company, not only for ongoing capital expenditure requirements, but for growth opportunities, and obviously for debt satisfaction needs. And finally, it really talks to your commitment to the enterprise, your commitment to the business. The next C in the model is capacity. And Rob just talked to you a lot about elements of capacity that are critical in the analysis. Cash flow being number one. Banks are cash flow lenders and balance sheet lenders at the end of the day. And so we need to make sure that obviously there is a clear source of repayment. Now, I've put a little comment at the bottom of the slide that says EBITDA is the new EBITDA. Apparently, I'm the only one that finds this funny, but the EBITDA is, the C is for coronavirus or COVID. So what we're looking at is we understand that there are some unusual expenses or some unusual drops in revenue that your business is experiencing right now. But when we normalize your EBITDA to take this into consideration, what does the picture look like? Generally, a strong cash flow before COVID will give us peace of mind that there is strong cash flow potential after COVID. So when you're looking at your cash flow, like Rob mentioned, try and quantify exactly what these one-time revenue drops or increases in expense are, and then compare that to your principal and interest payments, your debt obligations. So just as any personal credit application would look at how much income you have versus how much debt payment you have, business applications are no different. Look at EBITDA over P&I to make sure that there is adequate cash flow coverage to not only pay your current debt obligations, but also leave adequate money in the company for ongoing reinvestment. Your working capital ratio, Rob talked about as well, is also critical. So what is your net working investment? What are your current assets less your current liabilities? And do you have adequate working capital to be able to make it, frankly, to the end of the year? Working capital is a critical ratio and one that comes heavily under consideration when we're looking at the capacity section of any loan application. And finally, and I alluded to this one in the character piece, is the debt to equity base. So, you know, how many dollars of debt do you have per dollars of equity in your company? That's a critical consideration, otherwise referred to also as leverage. There are some clear kind of criteria as to what certain lenders with different risk tolerances would like to see within those ratios. And finally, the final C in the model is collateral. And collateral obviously comes in the form of security or assets that your lender will take I think what's important for me to stress under here is that, first of all, not all assets are created equal. Obviously, the more liquid and less volatile your asset is, cash, term deposits, etc., the least risky they are. The ones that are less liquid, for example, if we're talking about marketable securities, if you've got equities, obviously, there's potential volatility. Bonds have volatility that need to be reassessed on a regular basis. If you're looking at real estate, who are your tenants? What's the counterparty risk? Where is the property located? What is the marketability for that region? So on and so forth. So not all collateral is created equal. And I think the point that I really want to make here is that there are some asset lenders out there, mind you, but your tier one lenders are not collateral-based lenders. And what that means is that, and I hear this all the time, well, Ali, I've got $1 million worth of security, whatever it is, real estate. I'm only asking for $500,000. It's a no-brainer. I understand it from that perspective, but the lenders don't look at it that way. Security for us is the third level of comfort that we need to have. We really need to make sure that character is nailed. We need to make sure that the capacity is there. And then finally, that collateral piece gives us really the warm and fuzzies, if you will, at the end of the day, as a last resort. We are not looking to own or have transactions be the source of repayment. So that kind of talks a little bit about the 3 C's of credit. And as Rob talked about earlier, I guess I would just reemphasize that taking on additional debt may not be the right solution for your business. And when you do that, there should be a clear exit to pay off and service the debt if you should decide to take more on. Many of the programs that are currently available through some of our partners, BDC and EDC, still require standard underwriting conditions, still require standard risk appetite. And so it's very important, I think, for everyone to understand 3 C's of credit, again, as a high level of what banks and lenders, frankly, look at when assessing an application. If we could move to the next slide, I also wanted to share a model that I found on McKinsey's website. It's a great framework that helps businesses focus on rapid revenue recovery following the initial periods of sheltering your business against a crisis or a downturn. Obviously, the next wave of the cycle, if you will, is the focus on recovery. And a couple of key points here is firstly that speed matters. When we come out of this, and inevitably there will be opportunities that emerge, we need to get ahead of the competition fast. We need to be the first ones out of the gate. So the authors in this particular model suggest that we, quote unquote, shape up. And the acronym SHAPE is what I'm going to go over here, as you can see in the slides. Some of them are clear actions that need to be taken. Some of them are, frankly, just shifts in mindset. The first one is the startup mindset, which I love. So regardless of how mature your business is, when we're coming out of a period of regression, recession, protection, however, whatever is most relevant, we need to come out of this in an accelerated pattern. We need to bootstrap. We need to think like a startup. It's about action versus research. It's about test versus analysis. It's about agility. It's about accountability. This isn't the time to incrementally start recovering. The slow start won't help. So again, think like a startup, I think is a great tip to help with rapid revenue recovery. The H in the model is human at the core. How do your people work the best? Many of us have found during this pandemic that remote sales models are working. Some of our people are loving working from home, some of them not so much. However, you need to understand what your employees like, what their preferences are, and ask yourself also, have your leaders, have your managers embraced what's best for your people? Are they comfortable with the work from home concept, even if, if it does show to be profitable, productive, and that it's working, have they actually embraced that? Because frankly, it is a very new way of thinking. And although many of us were slowly moving and maybe even exploring or testing this concept, COVID has certainly accelerated that and forced us to move ahead of that innovation much sooner than I think a lot of us would have anticipated. The next, the A, is the acceleration of digital tech and analytics. And this is critical. I think, it's almost a cliche now to say that, COVID has really prompted a technological revolution in a sense. There was a funny meme that I saw on Facebook that talked about, is it your CEO or your CIO, CTO that's driving innovation? And the answer is no, it's actually COVID that's driving technological innovation in our company. And frankly, that is a reality right now. And going forward, it will continue to be a reality. Digital and omni-channel experiences are going to be key. In a time of crisis and coming out of a time of crisis, analytics are going to be more important than ever. Decisions need to be made based on logic and not emotion. Now, I think about certain industries out there that are leveraging satellite imaging and GPS, for example, to have more efficient routes for safety measures, so on and so forth. So adapting or adopting technology and thinking about, what does my digital revenue, my e-commerce experience look like? How do I make an omni-channel experience out of it? That was always coming for us. That was always our future. I would just say to you that the future is now during this disruption, following this disruption that we've just all faced. The P is the purpose-driven customer playbook. So probably obvious to say, but consumer behaviors and preferences have changed. Distance is back. There's going to be a period of return where people are not going to feel necessarily comfortable immediately to be in social settings. And so safety and hygiene will be a priority. Traceability will be important. You need to, as an enterprise, show and create trust, not only for your employees, but also for your consumers. You need to be able to show them that this is of paramount importance and show that the measures that you've taken to ensure that safety and hygiene measures have been taken. I think this will also probably prompt a local versus global type of behavior. And this is, again, not TD's position. This is just my hypothesis, but we've seen disruption in supply chains, which I'll talk about next. But more than that, I think that there's been a lot of protectionism that we've seen with the closing of borders and boundaries. And so that inevitably has created a little bit of a sentiment, which was already, frankly, becoming fairly popular, but has created probably an increased sentiment towards local versus global. Finally, the E stands for ecosystems and adaptability in the Shape Up model. And again, it's given the disruptions that we've seen and experienced now in supply chains, multi-sourcing and local sourcing will become popular. In fact, they'll become essential and necessary in some cases, particularly if we think about the fact that we need to recover rapidly. Borders may still be closed for a period of time. And so we're going to have to get a little bit more creative. I think that there's probably going to be non-traditional collaborations that will have to emerge from this. But again, it's a piece that needs to be taken under consideration. So at the end of the day, when I kind of wrap up this model, I would say prioritize your revenue streams, act with urgency. A crisis is not a time to take small incremental measures. The crisis is a time when you need to take large, probably overextended measures. And frankly, embrace agility and execute with speed. If we just move to the next model, the next slide. I want to talk a little bit about the third quadrant in the model that we presented at the beginning of the conversation today. And recall when Rob was talking about the cash conversion cycle and saying, are there ways to accelerate your payments from your clients? Are there ways to defer some of your payables in order to preserve your liquidity? Obviously, you can't do these things. You can't extend terms or accelerate payments unless you're on good terms and have good relationships. I would say to you that relationships have always mattered, but matter more now than ever before. Now is, frankly, the time to reach out. I don't think I've made a phone call in the last 6 to 8 weeks that's gone to voicemail. I mean, people are at home, they're available, they're answering their calls. People appreciate a reach out. They want to speak to you. They want to be heard from. they will remember you reaching out to them during this difficult time. So again, I encourage you to reach out and speak to people, whether it's your prospects and clients. Again, not a time for a hard sell necessarily just yet, but definitely the time to reach out and let them know that you're thinking about them. They're there. They have time on their hands. People are dying also for social media content right now. So reach out would be a key message that I'd leave with you here. When examining this third pillar, I'd say the other thing is that, you know, we need to ensure a collaborative approach to success. Now is the time that you want to surround yourself with a team, your trusted advisors. And if we look at some of the bullet points that I put up here, you know, one is just to remember be human. We're all facing this together for the first time. There's nothing to apologize for with respect to your results. This pandemic was not foreseen. It was not predictable. So move on. Don't give yourself a hard time. Don't beat yourself up over that. We're all facing this and we're all dealing with this together for the first time. Resilience. Crisis is exhausting. Your employees will become tired throughout this. Your leadership, you are exhausted. Do you have the bench strength to ensure resilience, to ensure continuity? Do you have internal expertise? We need to flatten our organizations as much as possible so that we can become agile and make quick decisions. We need to create local teams of experts that know the process as opposed to decentralizing the decision making and having people that aren't necessarily as hands-on with a particular process making decisions. That will help with agility, but you need to ask yourself, do you have the right people? Do you have the bench strength? And ultimately, are these the right people that will lead to your success as key employees as you move forward? Now, as we come out of this, we will need to decentralize again quickly, but for now, look internally. Who do you have? Do you have the right bench strength? Do you have the right players in place? And are these the right people for you as we enter the new economy? Surround yourself with your partners. Over communicate with them. Be transparent with them. Lawyers, your bankers, accountants, your insurance brokers, all advisors, mentors, or consultants that you know. Speak to them. Bring them to the table. Be transparent with them. Everyone is here to help everybody out. We're all human. We all want us to succeed as we come out of this. Now is not the time to go into your shell and not be transparent about what you're experiencing. Please over communicate. That would be a key message that I'd like to leave with everybody. And again, Rob talked about this, but your suppliers, your debtors, your clients, these are all relationships that are critical and that require over communication now more than ever. At the end of the day, leverage your network. And when you think about your bank and your other partners, your lawyers and your accountants, etc., remember that they have also a vast network of other clients that they can help put you in touch with respect to some of this collaborative sourcing that I talked about earlier, a field of experts across the country that could maybe bring some knowledge to the table. Whatever it is, don't lose sight of the fact that on top of your network, the network within your network is extremely powerful. If we move to the next slide, I'm going to pass it over to Rob, who's going to go over some quick tips that will address much of the fourth and final pillar.
Thanks, Ali. As you say, I'm going to wrap up with a few final things to consider and tools to put in your toolbox. The first one is to embrace online banking and cash management services. So in this era of physical distancing, there are a whole host of services that can help you do your banking without having to come into the branch. Services like TD's remote deposit capture or mobile deposit allow you to deposit checks from your home or office. And banks also offer night deposit options for making deposits at all hours without going into the branch. At a minimum, you should be signed up to view your accounts online. And that really links me to my next quick tip, which is to be on the lookout for fraudsters. Fraud has always been a big issue for businesses, and unfortunately, difficult times bring out criminals even more. Talk to your account manager about fraud prevention tips, but at a minimum, you should be checking your account activity daily and be very careful about clicking links and opening email attachments. Your bank will never ask you for your password or other sensitive information via email. Next one is talk to all of your providers. We talked about principal deferrals and rent deferrals. There may be other ways that your bank can help you as well in terms of, for example, low rate credit card options. Talk to your insurance providers. Are you driving less? And so can you reduce your premiums? Talk to your telecom providers. And don't forget about your personal expenses as well. If you're moving more of your business online, have you reached out to your merchant services provider to ask them about online payment solutions or mobile solutions? The next one is to keep up with your minimum payments, if at all possible. And this will help protect your credit score. And one thing I'd really like to emphasize, if you do need to miss payments, it's really important to let the lender or the provider know in advance. Reach out and over communicate, as Ali suggested in the previous section. And the final thing I want to mention, which is particularly of interest given this is Mental Health Week, is don't forget your mental and physical health. These are extremely stressful times. Don't forget to exercise, meditate, connect with family and friends, take a step back. And if you have employees, check in to make sure they're doing the same. Now I'll pass it back to Ali for some final thoughts.
Thanks, Rob. If we move to the next slide, I just want to leave with some final thoughts. First of all, a quick recap of some of the key points that we talked about today. Firstly, be human, stay in touch. Never has that been more important than it is today. You know, we are in a new paradigm of resilience, agility, and consumer behavior within a very rapid pace of change like we've never seen before. I've heard this expression, I think it was Sir Winston Churchill, don't waste a crisis. Many of us have made some incredible changes that are positive. I think, you know, we have to look for some of the silver linings that have come out of this horrific tragedy in a lot of cases. There has been some positive change that businesses have made. Don't waste those. Make sure that you maintain the good that you've been able to take out of this situation. Crisis argues for vigorous and outsized responses. Act quick. You know, expenses that had to be cut needed to be cut immediately. Don't beat yourself up over that. It's not easy, but at the same time, it's what's required during a crisis, which is what we've been facing over the last several weeks. As I mentioned, crisis is exhausting. Make sure that you have a deep personnel bench. It's the key to resilience. Flatten now, be ready to decentralize fast. Look at your key people, look at the subject matter expertise that you have within your organization when looking at making decisions to ensure that you're involving key people in your decision making who have the most knowledge about particular silos anyhow. Overinvest in technology, digitize your existing model, build new businesses. The future is now, frankly. Financial health, transparency, and partnerships will help you shape up. And maybe, if I could, I would leave you with this final thought. Not only are we faced with a global pandemic like no other, but we're amidst local tragedies here in Nova Scotia like we've never seen. Our hearts and our prayers are with everyone that's suffering or struggling right now. I'd like to encourage everyone here, particularly now during Mental Health Awareness Week, to reach out and connect with family, friends, staff, and loved ones. Despite the fact that we're physically distanced, we can become socially unified, and we will remain stronger together. Thank you very much. Rob, over to you.
Thanks, Ali. I just wanted to highlight some resources that people can turn to for additional information. There's a couple of our websites, public websites that are up there. But in fact, what I really wanted to do to wrap things up is highlight, we've also put the Chamber website up there, and wanted to take this opportunity to offer a big thank you to Patrick and his team for doing such a great job taking the initiative to gather all of the information from all of the different various sources and wrap them up together. I probably don't have to tell this audience, but if you haven't been to the Halifax Chamber website, it is a wealth of information about the ever-changing resources that are out there to support Halifax and really businesses in the region. So just a big thank you to you and your team, Patrick, for everything that you are doing to gather up that information. I know we've been sharing your emails with our teams as a way to help clients, just point them in a direction where they can go to learn more about the different resources. So thanks very much. And I guess we'll move it on to Patrick for questions if there are any.
Okay, great. Thank you very much, Rob, and thank you very much, Ali. Appreciate it. Let me just turn you fellows to gallery view so I can, oh, I've got to turn my video on. There we go, I'm back. Turn you on there with the speaker view. Okay, great. Thank you very much for that, that presentation. I do have some questions that I thought might be appropriate as we continue. But I would encourage anybody, if you have any questions, please take a look at the Q&A, and you can ask the questions on the Q&A or the chat function, which I also have open as well. So now I'll jump into my questions, and I guess you two fellows can decide who wants to answer those questions. But Ali, maybe I'll start with you, actually. I was really intrigued by your comment on character. I think the concept of character is something that that probably people don't think enough about. And you know, I know when I've gone to the bank in the past for a loan and said, well, I have lots of collateral. I think you make a great point, which is you need to have, it would be great to have that relationship with your banker, to have them know you in advance. I suspect it's not too late to establish those kinds of relationships.
Absolutely not. Never too late. And in fact, you know, now is the time to make sure that you have those relationships. At the end of the day, business and banking is all about relationships. And you know, you make a great point, Patrick. I think it is, you know, if you don't know your account manager or your relationship well, if they don't know much about you, your experiences, and that, now is the time to be human and to talk about those things and make sure that you know that you're all on the same page. At the end of the day, you know, you need somebody who's looking across the table at you, who wants to go to bat for you, who knows your abilities, knows your experiences, knows about your reputation and character, and wants to do everything that they can to provide the solutions that you need.
Okay, great, thank you. We do have a question here from Diane. How are the real estate and property markets, I suppose, surviving during the pandemic from your perspective?
Yeah, it's a great question. You know, I'm not a real estate expert. We have real estate experts within our team that simply focus in on that space. I would say that you know, it really depends. It's a very broad topic. When you look at there are certain regional economies, obviously, that where, for example, multi-unit residential properties continue to have a demand that exceeds supply, and so there's really no negative impact in those areas. You've got some other areas where, frankly, we're really just building an inventory up to levels that we need them to be. And then you look at some urban centers across the country where, particularly on the commercial front, there's thoughts around, well, geez, you know, now that all these industries have mobilized and moved their staff from hundreds and thousands of staff to work from home, will some of these people consider doing that going forward? And so will that obviously, you know, put my tenancy at risk? I think what's definitely clear is that the landscape will change and the way that we do business will change. There will still require, you know, real estate will always be a requirement, but what that looks like in the future will be different. Like, we're seeing a lot of examples now, as for an example, the retail, you know, the retail experience. People are going online to look at the different options, maybe customize and put things together, but then they still want to go into a storefront to kind of kick the tires, so to speak, or you know. So when I talk about that omni-channel experience, this is one that I think, you know, will be ever present in this new economy, whereby people are going to want to go online, do their own research, customize things as much as they can, and then go into a store and whether it's pick it up or whether it's have a chat or see what that final product could potentially look like. So it's an answer that's all over the board, because obviously when we talk about real estate, you know, there's commercial real estate, there's residential real estate, which I didn't even talk about, there's multi-unit, and then it's further split by geography. So it's a complex question. It'll be interesting to see how the cap rates, certainly for these investments, are impacted going forward, especially as some of the new numbers come out here for April.
Right. Okay. What's TD doing now for your clients? Is there anything outside of the federal or provincial programs that TD is offering?
So it's a great question, and I'll start it, Rob, and I'll pass it over just to make sure I haven't missed anything too much. So on the personal front, we came out with mortgage payment relief, 6-month mortgage payment relief. We had as Rob talked about, the credit card. We had some rate reductions and some lowered minimum interest rate payments. On the insurance side, TD Auto Insurance was giving or is giving premium relief. Even on the creditor insurance products, there was some premium relief that was offered. On the commercial front, we've been looking at, we've decentralized our decision making a lot, which is fantastic as well. So TD has in its commercial bank has the ability to make some local decisions. And during this particular time, we were looking at principal postponements. We've been looking at bulge temporary increases in operating lines of credit and so on. And those are decisions that we've been able to make very locally, which gives us agility. We move very quickly to meet customer needs in a very short period of time. What else? Obviously, with respect to the government programs that we've operationalized, the CBA, the co-lending with BDC, the BCAP program with EDC, Rob talked a little bit about the CEWS, the wage subsidy program. Now, while that's all administered by CRA, the payment system the banks are heavily involved with. So, we did a lot of work to ensure that the payments will be received electronically through our payment mechanisms and payment systems at the bank. So, on top of that, I'd say probably the most incredible thing that I've seen throughout this is our clients helping the bank and helping other clients. So we've had a lot of cases where, we've been short on PPE, we've not been able to get hand sanitizer as an example, or we've needed face masks or guards for a lot of our frontline staff that continue to work every day. We've had handful of clients reach out and say, look, we've got supply, we can help you, we can help your clients. It's been a very human time for that, and that's probably been one of the most positive things that I've seen come out through this period. Rob, I don't know if there's anything more particular on the small business front or across the bank that you wanted to touch on there.
Sure. Well, one thing I would draw attention to is you mentioned on the personal side, there was a very broad offer around mortgage payment deferrals, for example. And one of the distinctions with business banking and businesses, and certainly the way we approach business banking, is that it's a very customized, individual, it's not a one-size-fits-all solution for businesses. So we really encourage our customers to, and we're reaching out to our customers and reach out to us and let's have a conversation about your particular circumstance, because it may be that, that a principal deferral or, a bridge financing of some sort is a good idea for you, but it may be that that's not the right solution for you. And so really, it's a matter of let's talk about your particular circumstance and what makes sense for you. And that's certainly our approach.
That's great. Well, I mean, we hope to come out of this at some point. I'm confident that we're going to come out of this, but we may need a new business plan as we start to come out of this. Is that something you can help with, or do you know where we can get help as small businesses?
Sure, I think we can certainly help with some of the inputs, but I think this is a really good opportunity to, and Ali alluded to, this is the time to gather your team around you. And a lot of the stuff that I talked about around know your numbers, have a plan, have a projection, if this isn't something that's already been part of your cadence, don't go down a rabbit hole of spending hours and hours and days and weeks trying to create this from scratch for yourself. There are resources out there We work very closely with many accounting firms in the city, law firms, bookkeeping firms, and there are people out there that are professionals out there that are really looking for ways to help customers. And now's the time. If you don't have a great relationship with an accounting firm, or if your relationship with your accounting firm is really that they just do your taxes every year, now is the time to really build that relationship and get that advice on because they can do so much more for you.
So sorry, Ali, did you want to say something to that as well?
I just wanted to add to that. I've seen some incredible cash flow models that a lot of the accounting firms have put together to help customers manage their short-term cash flows that Rob talked about. So yeah, I think bang on point there, Rob. Definitely reach out. Sorry, Patrick, go ahead.
Yeah, no, that's great. So how do we as a business, and you're kind of alluding to this, Rob, I mean, if we didn't have a strong plan originally, how do we continue to learn and acquire new skills while we're working remotely? And what can TD do to help?
Yeah, and I think, Ali alluded to this earlier. It's just dig right in and start somewhere, right? So take a look at your statements, take a look at your existing financial statements that you had prepared for you, and then just start. And then I think, depending on your own comfort level, there's lots of great resources online. There's business plan resources. But then again, I would emphasize get some help from professionals who are experts in this area, and they can. There are really lots of examples of, as Ali said, cash flow models, planning models, business plan models, and it doesn't have to be super complex depending on how complex your business is. Lots of us are running, very small businesses, and maybe it's just as simple as, revenues and expenses, right? So I wouldn't. The one thing I guess I would leave, I talked a lot about all of the different things that you should know about your business, but I guess the counterpoint to that is don't make it into this big mountain. Go after the basics first and then get some help.
Well, and I think, sorry, Ali, I don't know if you want to say something, but I was just going to say, one of the things that you said in your presentation, I think was you, that said act quickly. Now is a time to act quickly to likely reduce the expenses that you can reduce, ensure that you have the cash flow coming in. I mean, what things can we do to ensure that we're getting kind of the proper cash flow? I mean, is there something we can do with receivables, or you mentioned the SEBA loan? I mean, is there something we can do to ensure that we have the cash as we start to pivot towards this reopening phase?
Yeah, I think there are a number of things that we need to examine. I mean, the answer is going to be different for everybody, and some may or may not have the same opportunities. So we talked one in terms of accelerating the receivables. So is there an opportunity from especially some of your larger clients that may not be facing liquidity right now to collect your monies faster from them? Is it worth extending terms to them to give them a discount for paying you faster? Now that was going to have an impact on your profitability, but you'll have to outweigh the pros and cons, and your accountants can help you decide whether or not that's the right action to take. Invoice faster. Don't drag your heels, obviously. Invoice right away. I mean, little things that we can do to make sure that that we're getting those, that we're starting the cash conversion cycle as quickly as possible. In terms of stretching the payables, now there's obviously some people that are integral in our supply chain that we maybe need to pay faster to make sure that we don't jeopardize relationships. But those relationships will often also be the ones that say, you know what, we understand and we're okay. You've been a great client for so many years. We're okay for you to take an extra 30 or 60 days potentially. So reach out to them, ask the question. I would also add that now is also a time when you're talking about acting quickly to consider what inventory do you need. Do you need to have as much inventory as normal? Do you need to maybe do you need to focus, like we talked about in the revenue profile? What is your core revenue idea? What is your core model going to be? And decrease your inventory spends. So I think those are some quick tips. The other one obviously is around non-performing assets, which we kind of alluded to, and that's, you know, maybe real for some people and maybe not for others. Is there equipment that you have that's been sitting idle, that's never used, that isn't giving you a return on your investment? Is there real estate that just hasn't been the moneymaker that you thought it would be? And you know, maybe it's not the best time to sell in terms of profit, but if you're going to make a profit, I'm telling you, you're going to want to have cash on hand, because that's critical, not only to survive, but also to be able to pivot to come out of this stronger than ever before. So I think those are just some examples. And again, everything, please consult your accountants because there's tax implications often when we talk about a tax sale. There would trigger some tax implications potentially. So you know, I would just kind of caveat with that. And I just wanted to add a point to your earlier discussion with respect to what's available out there in terms of learning and so on and so forth. I just wanted to talk about the fact that at the bank, we want to be a trusted advisor to our businesses. And so what that means is, if you don't know who to reach out to us. We may not be the answer, but we will know who you can reach out to, and we'll put you in touch with somebody. That's a part of the value that we should be adding to our relationship with you. And so again, you know, part of that relationship that we talked about is the reciprocity of sharing our network. And so, you know, if you don't know who to reach out to your bank and let us put you in touch with somebody that can help you in any particular case.
Well, and just to pick up on that, I think you said a while ago, sometimes reaching out to customers, you know, although you may not feel like it's the right time to call people or have conversations, I can tell you from our perspective at the Chamber, we're calling all 1,700 of our members right now, and we're getting amazing responses because they want to hear from us. Right. So, you know, I think your point is a great one, which is don't be afraid to reach out, have that conversation, and there'll likely be a better outcome than you had originally sort of thought.
Yeah. And you know, a lot of us have cut a lot of expenses. Frankly, we've been forced to. I mean, you know, I look at our travel budgets here in my business, our travel and marketing budget. I mean, they've been slashed for the last 8 weeks. So there are some fixed expenses that have naturally that have been reduced. There are others that we could incrementally look at reducing further. And then, you know, are there variable expenses that could be somehow managed at this time as well? So after you looked at the cash in side of the equation, you look at the cash outside of the equation and see if there are any other further cuts can be made.
Yeah. Well, I appreciate that. I think we might have to leave it there. Is there anything you want to finish us off with, or is that a good spot?
I think it's a great spot. Again, I just want to thank you. I want to thank the entire business community here in Nova Scotia and Halifax in particular. It's been a trying time. Everyone's really stepped up. And like I said, we will come out of this stronger than before, and we will remain strong together.
Thank you very much, Ali. And thank you very much, Rob, for your kind words at the beginning, or the end, I guess, of your presentation, the beginning of the time we started to talk. Really appreciate that. The Chamber is certainly trying to reach out to all of our members right now. And we're getting a strong response from those members, and we're certainly trying to over communicate, if I can use those words. And we're working with all our partners. You know, really appreciate TD speaking today. We have a relationship, an affiliate relationship with TD Meloche Monix, one of your sister companies on the home and auto side. And I will say they've been very good to talk to during this time about what we need to do with our affiliate partners as well. So really appreciate them as well. So thank you very much. This will be available. I should check my notes before I let you go. If you have any comments or concerns, you can certainly send them to us at concerns@halifaxchamber.com. We're happy to get back to all of our members. We're hosting more and more webinars every week. In fact, every day. Next week we have an exciting one on labor law. We had labor law 8 weeks ago where we talked about what to do if you needed to lay off employees, sadly. And now we're having a conversation on labor law in terms of what you need to do to rehire. So I'm seeing that as a positive sign. So check out our events lineup for a full listing. This webinar will be recorded and will be available to all attendees shortly. So thank you very much, Rob. Thank you very much, Ali. Very much appreciate you being here with us today, and appreciate everyone listening. Thanks very much, everybody. All right, bye.